Welcome to today's What Moved the Market show. I'm your host Prem. It's Wednesday, December 17th, 2025, and here is everything you need to know as the markets close for today. Indian equities ended on a cautious note this Wednesday, with the Nifty 50 closing at 25,818, down 41.55 points or 0.16%. The Sensex fell 120.21 points to settle at 84,559.65, declining 0.14%. Bank Nifty also slipped into the red, closing at 58,926.75, down 0.18%. The broader market sentiment remained tentative through the session, as foreign portfolio investors continued their selective selling, offloading equities worth nearly 2,100 crore on a net basis. This profit-taking came after recent strong rallies, with consolidation being the dominant theme. Markets traded in a narrow range for most of the day, reflecting indecision among participants over global interest rate outlooks and domestic macroeconomic catalysts. The rupee held relatively steady through the session, closing at 90.6020 against the dollar, appreciating marginally by 0.38% from Tuesday's close, providing some relief to exporters and foreign fund managers. Turning to the day's movers, we saw a mixed bag in the stock-specific action. Shriram Finance emerged as the strongest performer, surging 2.07% higher after the company announced its board would meet on Friday, December 19th, to consider fundraising options. Domestic investors bet on capital raising plans to support expansion. State Bank of India gained ground as well, climbing 1.58% after the government extended the tenure of its managing director Ashwini Tewari for another 2 years, providing continuity and confidence. Hindalco Industries also performed well, rising 1.3% on sustained metal sector buying, while Eicher Motors gained 1.15%. On the flip side, Max Healthcare Institute was the day's biggest laggard, plummeting 3.71% amid profit-taking in consumption and healthcare names. Apollo Hospitals followed closely, tumbling 1.98%. Trent declined 1.66%, while Bajaj Auto weakened 1.55%, and HDFC Life Insurance fell 1.49%. Interestingly, Indraprastha Gas emerged as a standout beneficiary of regulatory moves, jumping as much as 7.3% to an intraday high of 196.90 rupees, after the Petroleum and Natural Gas Regulatory Board announced a unified natural gas tariff structure, effective January 1, 2026. The new framework reduces tariff zones from 3 to 2, and charges consumers a single nationwide rate for compressed natural gas, promising transportation cost cuts of up to 1,200 crores annually for the city gas distribution sector. Additionally, Ola Electric Mobility fell 4.87% after founder Bhavish Aggarwal executed a limited monetization of his personal shareholding to fully release 260 crores in pledged shares, addressing a key risk overhang that had concerned investors. On the technical front, Nifty 50 tested key support around the 25,720 to 25,600 mark, but managed to hold ground, suggesting the downside remains capped for now. Resistance lies clearly at 26,000 zones, with the 25,900 level seeing significant call writing from option traders. Bank Nifty similarly held its ground above 58,800, with support visible at 58,500 and resistance around 59,300. The broader consolidation pattern suggests traders should remain cautious until a clear directional trigger emerges on either side. Looking at sectors, the day saw selective strength in PSU banking, which rallied 1.29%, buoyed by the SBI management extension. Pharma stocks also performed relatively better with gainers outweighing losers. However, media emerged as the biggest laggard, dropping 1.71%, followed by consumer durables shedding 0.96%, realty slipping 0.84%, and FMCG down 0.47%. IT stocks traded marginally positive, gaining 0.29% as rupee strength attracted some dip buying. Metals and oil and gas showed resilience too, with metals up 0.25% and oil and gas gaining 0.23% on global commodity strength. On the policy front, the capital markets regulator SEBI convened its board meeting today to deliberate on 11 key regulatory proposals, including a comprehensive overhaul of broker and mutual fund regulations, expected to be the most substantial update in decades. The board reviewed proposed reforms to exclude statutory levies such as transaction taxes and stamp duties from the mutual fund total expense ratio framework, ensuring greater transparency to investors. Additionally, SEBI discussed streamlining of IPO lock-in norms, relaxing Know Your Customer requirements for non-resident Indians, and introducing a closing auction session to enhance market depth and efficiency. The broader thrust of these reforms signals SEBI's commitment to modernizing India's capital markets architecture and attracting foreign capital through improved operational frameworks. On the commodity front, precious metals continued their stellar run. MCX gold edged marginally lower, declining 0.11% to close at 134,230 rupees per 10 grams as profit-taking set in after recent highs. However, silver continued to shine brightly, surging over 4% through the session to hit a lifetime high of 204,445 rupees per kilogram as of mid-morning trading, driven by expectations of further interest rate cuts by the US Federal Reserve following weaker than expected labor data. The precious metal complex benefited from a weaker US dollar and escalating geopolitical tensions in Venezuela and the broader Middle East, which lifted safe haven demand. On the energy side, crude oil prices ticked marginally lower to approximately $60 per barrel, reflecting cautious global demand outlooks despite geopolitical risks. The softer crude print provided some cushion to refinery stocks, but did not spark broad buying in the energy sector. From a global perspective, geopolitical tensions remain a key market influencer. The Trump administration announced an escalation of pressure on Venezuela, with a total blockade of all sanctioned tankers entering and leaving the country, raising supply disruption risks. Meanwhile, ongoing Russia-Ukraine peace negotiations generated tentative optimism, though European leaders remain cautious about accepting unfavorable deal terms that could trigger wider conflict. These cross-currents kept investors on edge, supporting defensive positioning in precious metals, while dampening risk appetite in equities. Additionally, softer US labor market data released today fueled expectations of one or more interest rate cuts by the Federal Reserve in the coming quarters, creating a bid under precious metals and high-duration assets globally. Looking ahead to tomorrow's session, traders should remain attentive to two critical support zones on Nifty 50, the first at 25,720 and the second at 25,600, where significant institutional accumulation is likely if the index revisits these levels. Any hold above 25,900 suggests consolidation within a defined range, while a break above 26,000 could signal fresh buying momentum. Bank Nifty remains tightly range-bound, between 58,800 and 59,300, and only a decisive close outside this band will provide clarity on the next trend. The Gift Nifty futures trading at 25,886 suggest a marginally cautious opening tomorrow, so traders should brace for continued sideways action unless fresh catalysts emerge. RBI policy communications, global inflation data, and any further SEBI guidance on F&O regulations could serve as potential triggers. The key to navigating tomorrow will be patience, disciplined risk management, and focusing on sectors that have shown structural resilience such as PSU banking and select infrastructure plays. For your trading action today, my advice is simple: use any weakness towards the 25,700 zone as a buying opportunity if you're positioned for a longer-term view. The consolidation we are seeing is healthy and natural after strong rallies, so resist the temptation to chase markets aggressively. We have covered all the bases today. As always, I encourage you to send in your trading questions, portfolio concerns, or any specific stocks you'd like us to track tomorrow. Tune in tomorrow evening at 5:30 for our morning recap, where we will review the opening levels, global overnight moves, and set up the day's trading opportunities. For now, stay disciplined, stay diversified, and stay tuned to what moved the market. Until tomorrow, this is Prem signing off.